Every mutual fund provides a prospectus with information about the mutual fund's objectives, risks, past performance, and expenses. You can find it on the fund's website and also on the SEC's website. In this video, we will go over the 5 most important things you should look for in a prospectus. You must read the entire prospectus thoroughly, but these 5 things are crucial. Before we start, take a pause and read this disclaimer carefully. This video is for entertainment and education only. Do your research before investing. If you don't know me, I'm Avanti. I'm a mom, an investment analyst, and a CFA charter holder. Follow me to learn how to simplify your finances and build wealth. The first and most important thing in a prospectus is the investment objective. Understanding the fund's investment objectives and strategies is paramount. This section outlines the fund's goals and how it intends to achieve them. Pay attention to the types of securities the fund invests in, the geographic focus, and specific strategies employed. Ensure the fund's objectives align with your investment goals and risk tolerance. For example, let me show you this prospectus for Ashmore's Emerging Markets Frontier Equity Fund from 2016. I'm not recommending you buy or sell this fund. I'm using this fund for illustration only. The stated investment objective on page 58 is long-term capital appreciation. If you scroll down to principal investment strategies, how the fund intends to achieve its objectives, it invests in equities of frontier market issuers. Then it goes on to define what a frontier market issuer is. The stated benchmark is the MSCI Frontier Markets Index. The next crucial thing to look for in the prospectus is risks associated with the fund. The risk section is essential for assessing the potential challenges and uncertainties associated with investing in the fund. Consider both general market risks and risks specific to the fund strategy. Understanding potential downsides helps you make informed decisions and set realistic expectations. If I scroll down this Ashmore prospectus, we can see some standard risks starting on page 60 that you will find in similar mutual funds. The first sentence says there is no guarantee that the fund will achieve its investment objective. The third most important thing to consider is fees and expenses. Examining the fees and expenses associated with the fund is crucial for evaluating its overall cost and impact on returns. Key components include the expense ratio, sales loads, if any, and other fees. The expense ratio represents the percentage of the fund's assets used to cover operating expenses. Lower expense ratios are generally preferred as they leave more of the fund's returns for the investor. On page 58, this fund has 3 share classes: Class A, Class C, and the institutional share class. It says more information about these classes is in the classes of shares section on page 123. We will go there in a minute. Let's look at the expenses first. The first charge here is the maximum sales charge, also known as the front-end load, because it reduces the amount that goes into the fund that's invested. Class C and the institutional share class do not charge this load. Class A has a maximum sales charge of 5.25%. That means if you invest $100 in this class, the fund can take away a maximum of $5.25 in fees and invest the remaining in the fund. If you invest $100,000, the fund can charge you a maximum of $5,250 as a result of the sales charge. About the shareholder fees section, it says that you may get a discount on the sales charge if you agree to invest at least $100,000. I will link my mutual fund fee calculator in the description so you can see how this sales charge can affect your performance. The next charge is the deferred sales charge, also known as the back-end load. Unlike the front-end load or the sales charge, this charge reduces the amount you can withdraw from the fund. If your investment in the fund with a back-end load of 1% grows to $100,000, the fund will deduct $1,000 and you will get to keep $99,000 when you withdraw. But there is a superscript here. Let's read what that says. For Class A shares, you will incur the back-end load only when shares are purchased without a front-end load and redeemed within 18 months of purchase. For Class C shares, this load goes away when you stay invested for longer than a year. The institutional share class does not charge any back-end load. The fund charges front-end and back-end loads when you invest in or redeem from a fund. The next piece is the fund's operating expenses. The first is management fees, which the fund uses for managing the fund. The next one is distribution or 12B1 fees. These are the fund's marketing expenses. So when you see a fancy brochure for a mutual fund or someone selling you this fund, you know those are your 12B1 fees at play. As a Class C shareholder, you may continue paying the fund 1% of your fund assets so the fund can continue to market itself to other potential shareholders. The fund also has other expenses like legal, administrative, etc. Finally, the fund can waive some fees and offer you a discount. In this case, it discounts slightly less than 1%. You get to pay 1.52% in fees if you are an institutional shareholder. If you're a Class C shareholder, you must pay the highest percentage, 2.52%. What that means is if, on average, you maintain a balance of $100,000 in this fund annually, you get charged about $2,500 in fees, which doesn't seem over the top, but watch this video and you'll be surprised at what fees can do to your portfolio. The fees get deducted from your assets. You don't write a separate check to the fund as fees, so you may not even realize the amount you may be paying. The next most important thing in the prospectus is the portfolio turnover. The portfolio turnover is 91%, meaning 91% of the securities are sold yearly and new securities take their place. A high turnover rate can have tax consequences if you hold such a fund in a non-tax advantaged account. Now let's look at page 123 for the different share classes. To be an institutional shareholder, you must have a minimum initial purchase of $1 million. If I scroll down to page 128, I see that the minimum initial investment is $1,000 for classes A and C. The fourth thing you want to look at is historical performance. While past performance does not indicate future results, reviewing historical performance data provides insights into how the fund has performed over different time frames. Look for consistency and consider the fund's performance in various market conditions. Understand that market conditions can change and past success does not guarantee future success. Let's see Ashmore's performance. The Ashmore fund had a pre-tax one-year return of negative 15% in 2015 for Class A shares and negative 13% since inception. The benchmark for those two time frames was negative 14.5% and negative 13%. The fund also provides fact sheets showing performance by year or other different periods. And you can find similar information through providers such as Morningstar. And finally, you want to look at the management team. The management team plays a crucial role in the fund's success. Look for information about the fund's portfolio managers and their experience. Assess the team's track record and whether they have successfully managed similar strategies historically. A skilled and experienced management team can indicate the fund's potential success with a question mark. However, suppose the fund manager is at retirement age and is being replaced by a less experienced manager. In that case, you may not be able to expect a similar fund performance in the future. Usually, performance tends to revert to the mean, so take that into account as well. So these 5 elements offer a comprehensive overview of the fund's objectives, risks, costs, performance history, and the team responsible for managing the fund. While these are vital areas to focus on, investors will also want to explore other sections of the prospectus to understand the fund's policies and operations better. If there are specific concerns or uncertainties, seeking guidance from financial professionals can provide additional clarity. Thank you for staying till the end. Feel free to ask questions in the comments, but I also like words of encouragement, kindness, and constructive criticism if you have no questions. If you enjoyed the content and found it helpful, please give me a like and a follow, and that will do for now. As always, don't forget to be happy, kind, and your best self. I will see you in my next video. Bye.